Hey everybody, welcome back to the channel. Hope you're doing fantastically well. So if you're new here, my name is Jason. I'm always looking at what's going on in the prop firm industry, any changes, and trying to bring you all the latest news. So obviously I'm funded with Blue Guardian, and as part of that I get regular updates from this particular prop firm, but I've also seen this across many others in the industry going on right now. And obviously as soon as one prop firm starts making changes, it does have a ripple and a knock-on effect to many others out there. So this could be the start of many changes coming to many prop firms over the next couple of months. So this is pretty much all in response to my forex funds when they went bust a few months ago. It really is sort of all of the firms out there trying to do whatever they can to minimize their risk and put things more focused onto the traders so they can actually have a better experience theoretically. But ultimately, a lot of the changes bringing to the prop firms may not benefit traders, it actually might be more of a hindrance, and therefore it could make it more difficult to be able to find the right prop firm and potentially go with ones who are not suited for them. Now, if you've not seen my video on prop firm match, definitely worth going and checking out their website if you are looking for new prop firms. It does analysis across the whole industry, real honest reviews, and any prop firm is actually no longer seemed viable or actually a reputable prop firm, they actually delist them from their website as well. So check out that video and a link in the description below. So let's take a look at the email I got from Blue Guardian and really see what they're actually explaining and how this could actually affect people not only in the challenges but also in funded traders. So starting off, dear Blue Guardian traders, we are implementing several important updates to enhance our services and better align with market demands. Now, aligning with market demands essentially for me means we are doing everything we can to stay legitimate, legal, and make sure there are no changes in the future that could actually come and impact us as a business. So for me, I think that's actually a pretty good start. But again, going on from there, we'll see how it all pans out. Next point, increased crypto withdrawal limit. We have doubled the crypto withdrawal limit to $2,000 to offer more flexible ways with your withdrawals. Now for me that's pretty good, otherwise you had to get paid through wires payments, which for a lot of people is not ideal. They want to have the transactions in crypto. And up until now, you could only get up to $1,000 in crypto. Now it's being extended up. A lot of traders don't actually get over that $1,000 or $2,000 mark anyway. I know we like to think that people are making $5, $10, $20, $30 or $40,000 every single month with the prop firms, but the reality is most people are actually on smaller accounts and taking smaller payouts. So again, that's a good change for me. I think that's going to be more advantageous for a lot of people. New 3-step evaluation model. We're excited to announce that we will soon be launching a 3-phase challenge in response to your overwhelming demand. Now 2 phases is pretty much standard normal. Now a lot of companies did bring a single phase. Blue Guardian did that with their rapid challenge. Now, I don't know why you'd want to bring a 3-phase. I know of no traders who have spoken to me who have said, we'd rather have an extra phase at the end of that. Whereas the reality is that extra phase, you could actually be getting funded and payouts. So I don't know why they're bringing a 3-phase, but obviously there could be a demand for it, because I know a lot of other prop firms have brought that in over the past 6 months. So potentially, this is actually another good thing for traders. Elite model discontinued. Due to low demand, we will discontinue the Elite model to focus on enhancing more popular services. So the Elite model had a bigger drawdown. I think it was up to 10%, whereas in the normal phases with Blue Guardian, it's 4% daily, 8% max. So I can see why you'd want to have a bigger drawdown, but the reality is if people aren't signing up, there's no point in having that available to people. Just focus on what they want to trade. And I think the standard model's been pretty good with Blue Guardian over the years, and I think it'll continue to evolve and make them better and better in the future. But this last point is really the most contentious and probably going to cause the most concern for traders out there, and that is around the refund policy on the challenge fees. We are adjusting the refund policy to take effect from the 4th payment for traders. This change is designed to encourage longer term trading strategies. Now I'm all for traders actually looking at the longer game, not thinking about a big boom and bust in month 1. My strategy has always been first month, no matter what you do, get into a profit, whether it is $1, $1,000, doesn't make any difference. You will get a refund on your challenge. And also a lot of the prop firms are obviously giving more refunds on the challenge fees. We know Blue Guardian and many out there give 110 or 125% of your challenge fee refunded at the first payout. If you happen to wait for 4 payouts, statistically we know that traders who get funded do not often get to the 2nd, 3rd or even the 4th payout. That's generally down to market conditions change, they don't actually continue with it, or they end up blowing the account straight away after getting funded because they believe it's now too easy and they're going to make $1 million. So for me, extending that out kind of doesn't allow traders to get that refund on the challenge fee. For me, that's always been the big selling point. Once you're at 0 risk, because you've got your challenge fee back, you've got your first payout, you can trade freely, below the account if you want to, because you can then go and take it again. So again, waiting for payouts is not ideal, but with bi-weekly payouts, at least you only have to wait, if you are able to get the payouts, only a couple of months, which again is not the end of the world, but it allows traders to have to evaluate and think about their strategies going forward. Now finally, we have leverage adjustments. Essentially what they're doing is changing the leverage only for funded accounts. This does not affect any of the challenges. What you are doing is reducing the leverage down. So forex pairs are 1 to 50, commodities, indices 1 to 10, and crypto 1 to 2. So we know the most traded thing on any of the prop firms is always gold. That is the number one traded commodity out there, probably followed by the US 30, so the Dow Jones, and also going on from the DAX. So looking at indices, they are generally the most traded, and you're reducing the leverage right down to 1 to 10. Now that's got twofold side of that. One is it allows the risk for the trader to be significantly reduced. So you are only going to be able to trade very small lot sizes. Let's say you got a $100,000 account. So if you're trading gold, you're only going to be trading a small number of lots, depending what other trades you've got going as well. So it really is limiting the ability for traders to go in there. Let's say you're going 10, 20, even 30 lots I've seen on gold on some of the bigger accounts. You can very quickly, if you're trading at those $1,000 to $3,000 per dollar movement, you can get some very quick profits. It's exactly the same with Bitcoin. So previously, if you had a $100,000 account with the current price of Bitcoin being $60,000, you could trade any number of Bitcoins on a high leverage. You could be going 5, 10 Bitcoins as an example. If price then moves quite easily, 1,000 points on Bitcoin, that's only a very small move on some of the volatility around what we're seeing at the moment. So you could very easily get a 5, 10, even $20,000 move on Bitcoin without too much of a problem, provided you've got your risk management in place. So by reducing that right down, you're actually limiting the traders only to be able to trade literally about 1.5 Bitcoin maximum lot size. So it really is sort of limiting some places the ability of traders to make profits, as well as reducing the risk on Blue Guardian. So I can see the benefits of both sides, but a lot of the times it's coming down to understanding what the leverages are. And if it doesn't work for you, then stop trading Bitcoin and just focus more on forex pairs where you've got a leverage of 1 to 50, which is pretty good anyway. So although I focus on Blue Guardian, that's purely because I've had the email and go through in detail all of the changes they're making. The main ones for me are around the refund policy and the leverage. We've seen leverage changing on another prop firms recently, trying to get down to what the US markets will allow on some of the leverage products. Now, if this is a case of them actually introducing or starting to get back into the US markets, that is obviously a good thing and allows more freedom for the US traders to start choosing prop firms in the future. But ultimately, if this is actually a way of limiting payouts for traders, I think that's actually a downside. That's always been the case with the prop firms. It allows you to simulate your trading on their platforms with simulated profits and get good payouts. But if you are restricted by leverage and obviously waiting up to the fourth payout to get your refund and challenge fee, I think it's going to have quite a big impact on a lot of traders out there who stick to trading crypto or gold as an example. So let me know any other prop firms you're seeing, any changes on right now, and I'll do my best to cover all those. But thanks for watching, and I'll catch you again very soon. Cheers.